European markets are at 2-month highs. Tell us how trade's shaping up.
Well, a choppy first half as we start the week here, but all in all, sentiment sunny side up after last week's EU summit didn't disappoint markets with inaction. Now, stocks are broadly trading higher, continuing that rally from the end of last week and fueled for the most part by expectations of more supportive policy action to come. A big macro day globally, capping investors' appetite for risk, though that disappointing data out of China earlier, showing the country's private sector shrank at its fastest pace in 7 months in June. And not a much brighter picture here in Europe. Eurozone manufacturing PMI was unchanged this month at 45.1, holding at its lowest reading in 3 years. All this very much keeping investors on their toes and concerned about the global economy deteriorating. And somewhat as expected, as the market balances relief of an EU plan of action with the lack of details so far on that plan, markets are sensitive to the ebb and flow of the news cycle. Saw some pullback on the stock markets after word Finland and the Netherlands plan to block the Eurozone's permanent bailout fund from buying bonds in the secondary markets.
So, Kim, what's the outlook for the week? What are the key events one should be looking out for?
Well, certainly any more details of the EU's plans as agreed last week. As we said, right now we're still seeing pretty broad strokes. Later in the week, the ECB and Bank of England will very much be in focus as they meet. Expectations are hardening. The ECB will cut rates to below 1%. And economists here are increasingly seeing a chance for more cash stimulus from the Bank of England. Now, Spain is also very much top of the agenda again this week. With yields still too high, the market will watch closely at the Spanish bond auctions come Thursday.